Hi, this is Nathan with Independence Money. And we always start with, if your money's not independent, how independent are you? And what a great subject to talk about when we're talking about precious metals, independent of the fiat system, and special guest, David Morgan, the silver guru and chief writer and editor of the Morgan Report, of which we're also members. So thank you so much for your time, and honored to get to have this interview again with you, David.
Well, no, Nathan, it's good to see you on camera. We met at the Silver Symposium, as we both know, and did spend a little bit of time with you, but I'm glad we followed up and are having this conversation. So I'm going to go ahead. We had a little off-camera conversation, and he asked me about the Silver Guru, and I said, I'm neutral on that. It's kind of, I put it more tongue-in-cheek. However, I did mention that there's been a few times in my career where people said, oh my goodness, you are the Silver Guru. One of those times was it was about the third speaking event I ever did. It was called Wealth Protection. And that was one place where there was a little bit of tax strategy once in a while, not every time. They did it annually. But the host asked me about, and this is early on, it's like almost 20 years ago. He said, we've been hearing this thing about silver being in this deficit and nothing ever happens. And we've heard this over and over, and we're just tired of it. What gives? And I said, well, what gives? I think he specifically said, Jerome Smith or some of the earlier guys in the silver movement, said, we have $200 silver by 1990 or something. And that's true. I don't remember. I remember $200 silver. I forget it was 1990, but it was thereabouts. So what's going on, big boy? He's kind of giving it to me. And I said, well, when Jerome wrote that book, the most silver that was ever mined for half a century was 350 million ounces. And he used that as his data, which was valid at the time he wrote the book. So he assumed 350 was an upper ceiling for how much silver you would mine on an annual basis. And if that remained true, you probably would have $200 silver by 1990. But what happened is the ink was drying, is there was a new technology in the mining business. And the new technology brought the silver production rate from 350 to 550 to where it is now at 850. And because of that increased production, you had a hell of a lot more silver above ground from those years onward. And he just flipped out. He goes, well, no one has answered that question. Because I have asked that question, and he named a bunch of people that had been at his conferences. And he was pretty delighted that finally he felt satisfied that someone had given him an answer. So I digress to come back, Nathan. I won't take all the time, but I'll never forget it because I was just, but I had the same question and had to dig kind of deep to figure it out, but I did. Anyway, back to you. Let's talk your shop, independent money. I like that.
Yeah, independence money. So, we do a lot of alternatives. So we do international real estate, we do precious metals, and we're going to talk a little bit about what I call tokenized precious metals later on here at the end. But the main thing that we really wrap everything around with the strategy is a tax strategy. Because I always kind of start, there's a lot of noise and conversation about investment expenses. Well, my money manager manages for less, or my mutual fund charges less. But really, when I go on speaking engagements, I always start with that question. What is the biggest investment expense? And hands down, it's taxes. That's the biggest expense. Even if you're looking at buying, precious metals, and you're like, well, I don't really have an inherent expense on that investment, but you had to make the money, pay the taxes to net paycheck to buy the metals. And so the tax was kind of on the front end. And of course, if you trade, there's taxes on the gains, and that's kind of where we're going to go into with some ideas on how to mitigate or eliminate, which is more of my favorite word, the taxes on that strategy. And they could be applied to other things like crypto or real estate or stocks, So that's kind of my niche as a certified tax specialist. I think about 1% of tax professionals in the nation have earned that designation. So that is the value add we bring our investors and viewers.
Excellent. Well, let's press on. Look at some examples.
Yeah. So one of the things that I like to kind of start with is, you're not limited to traditional investments and retirement plans like IRAs, Roths, and 401ks. It does require a specialized custodian, but the way that works is the IRA basically buys 100% of the shares of an LLC that you are the managing member of. So you have the name of this LLC now, and that LLC can buy, in this case, precious metals in its own name, including physical bullion. And that's your world, right? Gold and silver.
Pretty much. Resource stocks too, but yeah, primarily the metals, correct?
Yeah, exactly. So, you could contribute, I think, about $6,000 a year into an IRA or Roth, or, 7,000 if you're over 50. But what's really cool is the self-directed 401k with profit sharing. If you've got any clientele that are business owners, we can ratchet that up to around $67,000 you can contribute a year. And if your spouse is a co-owner in the business, that's a lot of money. You can, tax defer or do the Roth side and have it tax free.
So let me stop you there, Nathan, for just a minute. So you had a spouse involved, you could go into like 140,000 or something.
Exactly.
That's a pretty good whack. That's a pretty whack of change on an annual basis.
Yeah, and so that way, you can and you can roll over existing plans. So if you have an old 401k or IRA with just, mutual funds, and you can roll it into a self-directed. So I always like to kind of say I educate the clients and let them make their own decision based on the pro and the con. So I think one of the big pros, I know, from meeting a lot of the folks at your silver symposium, they like the privacy of precious metals, right?
Sure.
They're kind of a little bit of like, hey, the government's intruding too much. So, let me have a little more privacy back. So if you were to buy the precious metals with your self-directed IRA or 401k, again, that's using the name of that LLC. So that account is registered with an LLC that, could have some limits to people being able to trace it back to your personal ownership. So I think that's another big perk of it.
Very good.
Hello, this is Nathan with Independence Money. I hope you're enjoying this conversation with David Morgan. If you would like to learn how we protect assets and income from the theft of taxation and keep your money independent, check out this video's description for our link tree, where you could connect with us on the web, YouTube, Rumble, Twitter, or Patreon. Thank you. Now back to our interview.
So I think you and I were kind of talking a little bit about, you kind of see what I call the delta, between the metals, like the bang for the buck. Like, I think you were talking a little bit about you had some Eagles and we're wanting to switch to something else.
Exactly. There's been several times in a longer duration where you can swap gold for silver, silver for gold. You can swap bags for bars, bars to bags. There are opportunities if you're paying attention to the market. So there's these arbitrages that do take place. In fact, one was fairly recent, as you know, Nathan. It was March 2020. I mean, the gold-silver ratio got to somewhere around 125 to 1. I mean, that was a silver gift. And anyone that bought silver at that point or swapped gold into silver at that point or near that point was a very, very happy camper in a matter of weeks, because it was, as I suspected it to be, a spike high in the gold-silver ratio. So I know you've got something that we talked about before we started recording that I'm anxious to get to, quite frankly.
All right. So a little bit of disclosure. There are rules with owning metals in your IRA. Namely, you can't hold the gold. It has to be at a qualified custodian in America, so domestically in the name of your LLC, but we can help you with that. If you want to email us at independencemoney@protonmail.com or hit our website, independence-money.com. We'd help you out. But yeah, let's talk about some strategies here on what we can do with some tax things. So this is one of the things we do on tax strategies for Roth conversion. So, I know from the Morgan report, and all your viewers are fairly educated, that silver spot is fictitious. It doesn't really exist, right? It's just a price. But the physical is what is the real number. So in this case, American Eagles, when I checked today, was around $36 each. You use round math, we buy 3,000 coins. That's 108,000 in your IRA. IRA, of course, is tax deferred, meaning you got to pay taxes on the exit. But the Roth is tax free on the exit. And if you have an IRA, you can convert it to a Roth. It is a taxable transaction. But this particular strategy here, we buy the 108 grand in the traditional tax deferred IRA. And then as long as you get it, something written for your records, like you call up your bullion dealer and you say, hey, if I were to sell you these American Eagles, can you give me a quote, on email for my files? And they may say, hey, we'll buy those back at $31 each. Well, that $31 times 3,000 coins is 93,000. Again, you bought them for 108. So your reportable taxable transaction to the IRS is 15% less by just using the premium to work in your favor on an IRA to Roth conversion.
Okay.
It's I always say that we protect assets and income from the theft of taxation, because that's kind of what I think taxes are. So if we can help pay less to the IRS, I think that's a big win-win.
Sure.
So,
all right, well, that's well done. I think we've got another strategy we want to talk about, which I alluded to earlier.
yeah, so I'm gonna let you kind of do this. This is more your world. I think the objective here is, I'm saying, if you own it in, say, a Roth where you're not paying taxes on the trades, on the gains, this could be a pretty powerful thing if you'd like to break this down for us.
Yeah, and there was a time you could actually do this swap without taxes, but that rule's been changed. I forget how many years ago, but it was a few years back. So we're in today's world, so let's talk today. So this is thank you for this, Nathan, Independence Money chart. It's well done. So what we're looking at is the gold to silver 80-50 rule. So when the spread is above 80, it says you switch to silver. And when the spread gets, this is the gold silver ratio. So the gold silver ratio is above 80, you switch to silver. When it gets to 50, you switch to gold. Go to silver, gold, silver, gold, silver, and we're not going to gold yet. If you do that, as Nathan points out, now this is 30 years, it'd be some, metals heads such as yours truly, David Morgan, that would be doing this type of thing. Now, I haven't done it this many times, but I have done it several. Well, several's what, 4? And I probably have done it 4 times. And so this is just, it's not rocket science, but if you do it, what you come out with is almost 5 times the amount of metal that you would have by not doing this over 30 years. And it's very simple. Don't overthink it. So you switch to silver here in 1990 at 80, and then the ratio goes up. I can't read it, but it gets 100. Oh my goodness, I made a mistake, and it stays there for 3 years. Oh, I'm an idiot. No, you're not. So you have to have patience in this kind of strategy. But this would be something like a family office or a dedicated precious metals bull. And if you do what I teach, and you have at most 20% of your assets, of your portfolio, of your total asset base in resource / precious metals, it's not like you have to bet the farm on this, but it is a great strategy. I haven't seen this in any lectures that I've done in a long, long time. So I really thank you, Nathan, for bringing it to everyone's attention.
Yeah, no worries. And then this kind of brings us to a topic I've been definitely anxious to have with you. And it provides a solution with the LODE project. And in full disclosure, I am invested in the LODE project, not only in the tokenized metal, but in the LODE tokens, which in my world feels kind of like a private placement stock, like it's kind of participating in the profits of the company. And in the IRA / Roth world, it solves the problem for the viewers that want to have some metals outside of the United States, because since it's kind of treated more like a crypto strategy from the IRS, even though it is backed by the physical, it would allow you to have those metals in the LODE's vaults overseas. But it solves this big problem on this chart. You can see this trading doesn't quite work, the 80-50 rule, because it's talking percentages of ounces. At last I checked, you can't get a 1.82 ounce gold coin, right? They're only in denominations. So the LODE, fractionizes that to the point where you can do these trades. So, Yeah, let me let you kind of talk a little bit about the LODE project, and kind of what the importance is to kind of the new world of transactions going forward.
Well, I'm doing a lecture in about less than a week in Las Vegas. We get the exact title, but it has to do with crypto. Precious metals backed cryptocurrencies will be the next leg up in the crypto space, something along those lines. And staying specifically on the 80-50 rule that we just looked at, Nathan, the beauty with something like LODE is that I've got both silver and gold. Let's say I just have silver on my account in LODE, and I want to convert it to gold because the ratio is favorable. All I have to do is take about 3 seconds on my phone and I convert it. Not only is it convenient, I don't have to go down to the dealer. I don't even have to call you up. And of course, when I call you up, then you've got to get a hold of the custodian and tell the custodian, take these bags and, I've got a market for you over here, blah, 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 blah. None of that takes place. It's all done synthetically, although it's backed by physical metal. So you basically click your phone and you move from silver into gold, let's say, and there's very little slippage, because the slippage that you're aware of, and most of our viewers are, is that is a pretty big spread, especially on silver right now. So what you sell your silver for will be less than what you would buy it for. That's the premium. And then the same thing goes on the gold side. So when you do the math on it, sometimes it's not really worth it depending on the quantity you have. Whereas with LODE, there isn't any slippage basically. And I love that part about it. In fact, I mentioned that a few times, but very few people picked up on it, but you did, Nathan. And that's an aspect of having digitized precious metals. And then of course, the jurisdiction makes a difference. As you said, LODE is actually jurisdiction-wise, it's out of Europe. And of course, it's blue skied other places. It basically emanated from what they call the Crypto Valley, and I forget the name of the canton in Switzerland, but I'm pretty happy with what we have as far as legalities are concerned and playing it by the regulation that are already there and are becoming more and more to the fore on all of the crypto space. So I've kind of been ahead of it on that aspect. And that, even though it's not my philosophical bent, I'm more free market and, not big on the regulators. It exists. It's the real world. You got to be cognizant of it. And since we have been, it's taken a little longer to get probably where we are now, but we don't have to back up and backtrack and all that kind of thing because we played with the ongoing, ever-changing compliance that's required, and we have done that.
Yeah, and it just feels like real money. Like I had my attorney read the documents, and it very plainly, unequivocally says you can redeem it for physical, and that's all it can be redeemed for if that's what you ask. Like, in other words, It's not like the COMEX where they could choose to redeem in cash or physical. If you ask for physical, they legally have to give it to you. That's the way the dollar used to be, right?
Right. Well, let me pause you there again, because what a lot of people aren't aware of, and first, I'm biased, people. I put a pretty good whack of silver into the LODE program, not initially, although I gave them a bit, but I increased that as the project got better and better and better. My point is this: there are other silver and gold backed communities out there in the crypto world that you cannot, if you read the contract, you cannot get metal. You get fiat, it goes up in price, you'll get more pieces of paper, but you can't get metal. Is that true in every case? No, but it's often true. And most people aren't aware of that. They think they're buying silver. It's just like buying an ETF. You can't get the metal out of an ETF. Even like the PSLV, you can under certain very cumbersome conditions. And I have a few people, let me reframe that, 2 people that I've known or entities, and it is just a real pain in the rear end to be able to really do it. Even though they have all that set up, it's not easy. So back to LODE, it's pretty simple to do it.
Yeah, and if anybody needs help on getting that set up, you can reach out to probably either one of us, right?
Yeah, you could get a hold of me. What I would do is I would probably, forward the email or the comment to one of the people on the project. I'm busy enough without doing that. But what I will say is, and this, of course, I'm biased, I'd say it has one of the best customer service back offices of anybody anywhere on not only on the web, but especially in the crypto world. I constantly get messages. Thank you. I spoke to, I won't use any names, but I spoke to from the LODE project. They walked me through it. I got my wallet. I'm up and going. Thank you. There aren't many places that do that. There's businesses that their whole business is helping gray hairs like me set up a crypto account of some type or another. And there's also something, I think it's on Telegram, where people can participate in. So is it the most perfect digitized silver and gold project in the world? I don't know. I think it's one of them. Is it perfect? No. Has it been errors? Yes. Are there still problems? Yes. But it's certainly moved the right direction. And I've always advocated, Nathan, as you know, that these type of situations, it's not your total metals portfolio, right? I mean, it's for part of it. And the convenience is awesome. I mean, when you pay for something with a gold backed debit card or whatever, it's between you and your brain. The merchant has no idea that you're paying in gold. None. It's transparent to them because from the banking side, it all looks the same. They don't know in the back office, so to speak, that the back office sold so many grains of gold to make it equivalent to X amount of fiat on that given day at that particular time. So maybe I'm getting too complicated. I don't mean to, but I think the convenience, let's just go one step further. And obviously I've taken over the floor, but one of the problems with gold and silver back in the early days was how valuable it was. And if you had a big little sack of gold in your or silver in both, and you're walking around town, theft, loss, whatever. And that's why the gold certificates were so well received, is what the goldsmiths had the gold, so it was protected in their vault, but all you had to do is give them a piece of paper, and that's why the certificates started trading. Well, here in the modern world, you have the real gold, the real silver, it's in a vault, but you're doing it with your phone, just like you would with Apple Pay or Vimeo or, Vimo. I think I just did a Vimo with somebody. They had to have Vimo. All right, set it up in 12 seconds and gave them Vimo. But you get the idea. And this is the way the world's moving, and that's what my lecture is all about. And if you don't want to be left behind, you've got to be in the crypto space. And further, I think as this degradation in the fiat fiesta continues, where people realize that even physical dollars aren't going to help you if the inflation rate stays where it's at and or increases, then there'll be a run to metals. And let me turn it back over to you, Nathan. What do you think? I mean, you're pretty young. You study stuff. You've got a tax specialist. This is not rehearsed. What do you think we've got to look forward to on the inflation front?
I don't think it can be controlled. I think they've manipulated it to the point that they've run out of options, or the old-fashioned expression, painted themselves into the corner. I think we turn negative GDP. Well, if we do that again, that recessions turn into, a depression after so many negative quarters, and markets start dropping. At that point, the Fed's only response is to cut interest rates, by what? The 50 bips they raised them. Well, that's just going to make inflation turn into hyperinflation. And what can they do, to stop that? Well, they raise interest rates, puts us back into recession/depression. So I think they've got a problem. In my, again, biased opinion, the government is self-serving, right? And so if they've got all of this debt, what's the easiest way to fractionate your debt? It's to have more money. So in the consumer world, if I was making a $3,000 a year mortgage and only making, a month, say 36 grand a year, and I was only making 50 grand a year of income, if I wanted that mortgage to feel smaller, I need to make 100 grand, right? So if they inflate the money supply, the problem of the debt on their balance sheet goes down. So I think it behooves them to let inflation go. And if you look at taxes, right, if the inflation pushes your stock market or your metals portfolio or your real estate market higher, and those are in taxable accounts, when you sell them, that's more capital gains tax for the IRS. So I think it's in their interest, their personal self-serving interest, to hose the American people to save their own skin. I don't know that they're going to be able to hold on the reserve currency. And that's why I'm interested in the LODE project, because from as far as I've ever seen, every time a reserve currency changes, it's backed by metal.
Yeah. So far, well, time will tell. Well, if it's okay with you, it's been a lot of fun, and we should probably do this again. We'll probably generate some questions, and that's good. And give out your contact points. Mine are pretty well known, but I'm not going to anyone that asks me a tax question. I'm going to defer to you. I don't take tax questions, but I certainly want to provide people with knowledgeable people such as yourself. And I really, again, appreciate you coming up to me, reaching out, and letting me know. This is one of the reasons I love doing the live conferences, because you never know who you're going to meet and run into that can help the community, help each other, and maybe think things through maybe in a different way. A lot of people thought, well, was it really worth it to swap gold to silver, silver to gold? Well, yeah, and especially as we just said 3 or 4 times, under current conditions with the electronic world that we're in, can be advantageous, better than it was at any other time.
Absolutely. So I think first off, you can meet both David and I at the Silver Symposium in August, and that's in Spokane, Washington. And we can get you some more information on that. You can reach me again at independencemoney@protonmail.com, or our phone number 970-233-2219. And always like to advocate the Morgan Report. Very well written, a lot of information. So you want to tell people how they can get a hold of that?
That's at themorganreport.com. You can get on our free list, but if you want the inside scoop, so to speak, there's a paid subscription service that's under the subscribe button, and you can read about it and you make a decision.
All right. Thanks so much, David Morgan. And let us know your comments. And if you like this video, share it. Helps the good old fashioned Google or YouTube algorithms, or definitely comment. So thank you very much. Appreciate your time.
You're welcome. Thank you.